So now let's take a look at the battery input sheet, and you'll see it's laid out very similarly. So as we zoom in, we'll start at the top. Once again, it's market information, and this information is pulled entirely over from the PV input sheet. So if you wanted to make a change here, you could overwrite it in these cells, but we highly recommend you don't do that, and you would go to the PV input tab to make that change. We don't have SREX here because this is the battery system, but the next section is revenue streams. These are all the different opportunities for your battery system to have a positive impact on your investment. So this is the revenue stack. These values that are put in here directly correspond, of course, to the cash flow, but they're also illustrated here in this revenue stack bar chart. As you make changes over here, you're going to see the changes perpetuated through the cash flow chart and the bar chart in real time. I'm going to zoom back in to these cash flows, or to these revenue streams. I'm not going to go over all of them in this video. That's a little bit beyond the scope of the walkthrough, or dramatically beyond the scope of the walkthrough. But this section is broken down to subsections effectively that you can see by the titles here. So these are your real-time market variables, and it has to do with what is the energy worth, is it taxable, and how much of your battery capacity and inverter power are you attributing to that potential revenue stream. Then you have sync reserve participation, where you put in the factors for that, such as what it's worth, how often you're participating in it, and what depth of discharge you're going to allow your battery to go down to participate in that. We also have utility call hours, load shifting, in case you wanted to move an early afternoon peak where electricity is really expensive and you wanted to shift that to some other part of your day with your battery, you could have that here. We have the two different peak shaving options, whether you're trying to do daily demand reductions or coincident peaks with your RTO for capacity reduction measurements. And they do 5 periods a year, and each period is 2 hours. You could capture that savings opportunity here. And then we also have peer-to-peer, standard contract, and premium services. This revenue stack or revenue stream, these two don't really exist yet. The legislation and the metering laws and regulations and requirements aren't in place, but we feel like we know it's coming, and the only way to help keep that conversation moving forward is to begin having discussions about what that's going to look like. What is it worth? Is there value to doing this? Well, now we can throw some math at it and take a look. And yes, there is definitely value in doing it. How much value? Well, we can calculate it. And after we calculate it, that's going to help spur the conversations as the industry continues to move forward, and we'll start looking into these unique interconnection agreements and what the regulatory structure needs to be around it. After you get the revenue streams all squared away, you would go down to your operational information, and you'll see this is a little bit bigger here for the battery system, and that's because, well, batteries are slightly more complicated to some degree. We also have independent inverter size and battery capacity, and that's because they don't always match perfectly. One thing that we've noticed in our experience having these conversations about battery systems is if you're not specific about your units, you can get a lot of things lost in translation. Right now in the default setting, we have 500 everywhere, 500 kilowatt DC PV system, 500 kilowatt battery inverter, 500 kilowatt hours battery capacity. However, there may be situations where you have a small inverter. Maybe you only have a 250 kilowatt inverter, but you've got a megawatt of battery capacity. As you'll see here, we just got an alarm that based on the revenue streams, we need to look into this. But it's not it's not unheard of to have this situation. And if you have a lithium battery with a high C rate, maybe you've got a lithium that can do 2C, you may have a situation where you've got a 100 kilowatt inverter, but you only have a 25 kilowatt hour battery, meaning, well, we could run this battery at 4C and pull 100 kilowatts off of it, but it would run out of juice in 15 minutes. And that may make sense for certain situations. So we have the ability to have those independently controlled here. Also, this is where you can input how much of the battery charge based on your capacity turnover is coming from renewables, which is critical for your federal ITC value. You see at 85%, we're only allowed 26% of the ITC. If we change this to 74, which is below the 75% cap, the ITC goes away. If you go back to 100%, you get the full ITC. And then this is how much of those kilowatt hours are going to be coming from the battery, or from the PV to the battery. We also have efficiency calculations, your base uptime calculations, and some other usage information in this section, which you can explore further by reading the notes. And then just like the PV system, below that we have the pricing information. You can do simple or advanced. And because we have the inverter and the battery capacities independent, we also have the inverter cost and battery costs independent. Because you may have situations where one integrator is giving you both of those together. They say, here's your turnkey battery system for $1 per watt. Well, that instantly should set off a little bit of an alarm. And is it $1 per watt, or is it $1 per watt hour? Which is kind of one of the reasons we have these independently, is because that's a really important distinction. But if per se everybody knew what they were talking about and they said it was $1 per watt or $1 per watt hour, you would just take these two values and make them equal $1. And as you can see by coming down here after you highlight them, the sum is currently 94 cents. So we would need to add 6 cents to one of these two inputs to get to that $1 per watt value. We have the inverter replacement option, O&M, and insurance, just like on the PV side. And then the next section that's important for the battery is these secure IT costs and CSP fees. So a CSP is a curtailment service provider, and we'll go into that in detail in a future video. But what's important to understand here is there's more than likely a third-party operator that's going to be needed to manage your battery system and follow the market control signals. And they're going to need to be paid for those services, whether it's a one-time initiation fee, a monthly subscription fee, excuse me, or a revenue share opportunity, which is currently modeled here at 20%. So any money they save you or any revenue they build for you, they get to keep 20%. We also have the financing, just like on the PV side. Then if we move over to the right, we have rebates and incentives, identical to the PV. And then we have battery refresh. So this is the ability to account for batteries as consumable items. And if there's a situation where the battery manufacturer or whoever you're buying it from says, oh, this is all included, we will maintain it for the life of the system, you could just zero these all out. Or you may want to set some money aside to buy new batteries. And just like the SREX, you can change the period that occurs. System costs, just like on the battery sheet. And then the period of analysis and the financial metrics are once again identical to the battery sheet. Finally, we'll take a look at the output page. There's really nothing super exciting about this sheet. It's merely a reorganization of the different sections, and it takes, rebates and incentives, for instance. Right here, it has the battery and the PV side by side, similar with the financing. So this just is a good summary in case you do a run and you want to print out your results or send it to somebody, maybe include with them some cash flows from the calc sheets. So I hope this was a useful walkthrough and help you understand, yes, there are a lot of worksheets in this workbook, but you really don't need to focus on all of them, certainly not to get started. Spend most of your time on the input sheets, PV in and battery in, and you'll find that once you get these sheets set up for your typical use case in your area, many of the values are going to be unchanged. The price of a PV system, once you know the installers you're working with, is probably going to be similar. Assuming you have the appropriate siting and orientation, this value is not going to change. The market values probably aren't going to change. Tax implications and the rebates are also not going to change. So what you're going to find is that once you set up your basic default version, kind of just like you downloaded the tool from us, once you create your own, it becomes really quick and easy to start doing multiple different scenarios and performing what if analysis on many systems in a rapid period of time. So in the next couple videos, we're going to do some use cases in order to help you get up to speed even faster. We'll create a couple different use scenarios, and I'll show you how I would do the calculations, whether we're doing owner's rep services or maybe we're interested in seeing how the market's going to evolve over time. So until then, good luck, happy calculating, and I'll see you in the next video. Thank you.